on the budget which was announced on the 5th of March, I think we have to be realistic. It's an election year, so our expectation was a much more giveaway budget. That means with more goodies, freebies, etc. But on that standpoint, what the budget has presented is, in an overall perspective, it's good, because it has relieved us from the business community's point of view with some positives. So the positives pretty much would be, we see a shift from the traditional mechanism of giving stipends or subsidies or election goodies to a much more pragmatic way forward with regard to enticing people to invest through a government-sponsored subsidized interest loan scheme. So that is a positive. That is the biggest positive which I see. But that being said, there is significant concerns as the business community or the investment community or as the public which we see. The biggest concern would be the expected or the forecasted economic growth, which is somewhat lackluster. For us as a country, for us to proceed or progress, we need to be in the economic growth rates of north of 6% to 7%. Otherwise there is no real incentive for us to do business or stay in the country. So that is a big letdown, I should say. And other aspects like how we form capital in the country, how we entice investors to come into the country, and how we encourage exports, the mechanisms of that is not there. We see some areas where the government could have addressed that, but for some reason it's not mentioned. The capital markets is another area which has been neglected. Energy reforms, SOE reforms, those are other areas. But again, as I said earlier, being election year, the populist mandate needs to be managed. So we do understand the reality. But things like a reduction in dividend taxes would have encouraged more equity infusion, not only into the listed space but into the private enterprises, and created a capital formation within the country. Instead of that, we see in this budget a drive towards more debt based funding requirements, which we do not see much more positively. On the overall perspective, I think it's a more of a realistic budget given it's an election year. The key positive is move away from subsidies, pure subsidies, and a more structured way of giving out subsidized loans at a subsidized interest rate. So that is a key positive. The negatives would be key sectors of the economy is not being addressed, whereas GDP growth is a big concern to attract investments, to ensure the locals continue to invest, and the concern of driving up consumption. Right? There is a lot of incentives or allowances being increased to the state sector, but the private sector needs are not addressed. Things like by way of a marginal decrease in the payee taxes, or overall reduction in the cessors and other taxes which the private sector pays, could have been looked at. Right? So that is our my viewpoint on the budget which was announced on the 5th.